Welcome back. You're still tuned into Chartbusters on CNBC-TV18. Well, infra solutions player EMS has made its debut on the exchanges. The listing has been quite strong. It was with gains of around 34%. It's cooled off a little bit. We have with us Ashish Tomar, who is the founder as well as the managing director of the company, joining in to discuss the company's post-listing strategies. Ashish, hi, welcome to the show and congratulations on what has been a good listing for you all. If you could now start by giving us a sense in terms of the business prospects as a listed entity, the revenues you generate, can you just give us a sense in terms of what we can expect in FY24, FY25, and what is new business or the new order intake looking like for the company?
Yeah, thank you, ma'am. Thank you for this opportunity. As per the business revenue, our last year's turnover was around 538 crores, and our current order book stands at around 2,000 crores, and this will be translated into revenue in coming 2.5 to 3 years. So I can safely say that we can maintain our past growth record of around somewhere in the ballpark figure of 20-25%.
Okay, all right, 20-25%. Hi, Ashish, congratulations first on a solid listing. But now it's the testing times, right? When the market is excited about your stock, they want to focus on the business prospects. So 20-25% is what you're saying you're going to grow. What kind of profitability, though, will you be looking at? If you could tell us margin outlook, point number one. And point number two is, what is the order inflow? 2,000 crores is the order book. Further orders you're expecting this year?
Yes. Yes, we have currently bid for projects worth around 2,000 crores. And those are in various phases of evaluation. And evaluations will be finalized within coming 2 to 3 months. And we expect to secure a good amount of projects from them. Well, rest is in God's hand.
But traditionally, what is your success ratio when you bid for something? I mean, how much of it do you normally get when there's a bid on offer? Is it 20%, 30%, 10%? What could it likely be? And also the margin question, I missed that answer. We have been maintaining profit after tax margins of around more than 20% since last 10 years or so. And as for the profit percentage of tenders that we secure out of the those we bid for, our past record has been around 15 to 20%.
Okay, 15 to 20% is generally what you garner in terms of the total bidding amount. But Ashish, wanted your thoughts in terms of expansion. If you could give us a sense in terms of entering higher margin projects, what kind of bidding can we expect there and what would the margins be? And geographical expansion within the country itself. On these two parameters, if you could guide us, FY24, FY25.
Yeah, ma'am. Currently, we operate in majorly 5 to 6 states: UP, Bihar, Uttarakhand, Rajasthan, Madhya Pradesh, and Maharashtra. And wherever we can secure projects with our fixed, the numbers of margin that we target are more than 25% of EBITDA. And if we get those kind of projects anywhere in country, then we can go for them. There's no aversion to entering new states.
Okay, so but the margin has to be 25% or plus.
Yes. That has been our record, and those are the kind of projects that we target.
What would you foresee as competition going forward? Do you think that the bidding process would get tougher for you to probably maintain your margins in order to shore up revenue when you're bidding for orders?
I think as our growth rate is slightly higher than the market, then what we hope to achieve is that as we get eligible to bid for projects of higher quantum, then I think we should be looking for less competition than those of the lower quantum projects.
All right, Ashish, for a business like yours, terms of payment will be very important because the counterparty most of the time is the government.
Yes,
so could you tell us how fast do you receive
Yes,
your money? What are the terms of payment?
So we only target projects that are funded by external funding agencies such as World Bank, ADB, JICA, or KFW, etc. And at the very least, those projects should be funded by central government. So in those kind of projects, there is no difficulty in securing funds, and the funds are released on time as per contracts.
Okay, since most of your projects are funded by World Bank, Asian Development Bank, could you tell us how do the interest rates trend there?
Yes. Can you please repeat that question, sir?
How do the interest rates trend? Given that you're going to, since you're being funded by these bodies, how do the interest rates trend for you?
Yes, yes, sir. Interest rates, we do not have any debt from any kind of bank, and even the mobilization advance that we are given in these projects from the World Bank is interest free.
Oh, okay, it's interest free. Got it.
Okay. Just a quick, word, Ashish, with regards to your total consolidated debt on books.
Ma'am, I think we have around only 40-45 crores of debt.
Yeah.
That too, because we secured a HAM project in Mirzapur and Ghazipur, in which the government gives a funding of 40%, and rest 60% has to be financially closed by the contractor, in which we put in around 20% of the equity, and around 40% is secured through loan from banks, which are released as per the work done is certified by department progressively.
Okay.
So
all right,
for that
Ashish.
project, we have secured a funding of around 45 crore.
Okay, all right. Good to know. Thanks, Ashish, for joining in and speaking with us, and congratulations on what has been a good listing for you all. 27% higher for that particular company. They are growing more than the market at this point in time. They will be targeting high margin projects, but they are only bidding for projects with a margin of over 25%, or they do have around 45 crores of debt on their books. We need to take a short break with the news that the Bank Nifty is down around 280 odd points. We have the mid-cap index, which is down around 43 odd points. More details on the markets as well as stocks on the other side. Stay tuned.